Thanks for joining us on India Development Debate tonight. And most high-frequency indicators, like I was telling you, are showing these mixed trends compared to the previous months on account of the heightened geopolitical tensions, the kind that we've seen between April and May 2022. So many external pressures playing out as well. So where does the economy truly stand between all the numbers that we get, between the ground realities that we bring up on our shows? Are we or not on track for robust growth? Where is the reality? Can we tide over the several economic headwinds that we are talking about? Let's understand this better. And for that, we've got a great panel tonight. Mythili Bhusnurmath is our consulting editor here at ET Now. She joins us. Also, D.K Joshi, chief economist at CRISIL, is here. And Madhavi Arora is lead economist at Emkay Global. Thank you for joining us this evening on India Development Debate. Let me take it across at this time. First to Madhavi. Madhavi, as far as I was having a chat about what's happening on Wall Street, clearly there are recessionary concerns over there. There is the possibility of growth, not just in the US, but all over the world. Growth is declining. The Indian economy, for some people, is showing a certain amount of resilience. We are seeing a declining rupee. Our current account deficit is not looking too strong, but other indicators are looking not too bad. In these troubled times, in your opinion, where do we really stand?
Well, as you rightly said, the outlook is quite gloomy as far as the global economy is concerned. It's shrouded by considerable uncertainty because of the U.S. War in the Europe and the kind of front-loaded monetary policy normalization that is happening across the world, especially the developed market. This is, of course, happening on account of persistently high inflation and multiple waves of COVID pandemic that we have seen over the last 1.5 years. I think, notwithstanding the challenges of that we are seeing from the global spillover, to some extent, India economy has shown some resilience in terms of domestic dynamics. But I have a feeling that over a medium term, eventually India will probably follow global suit. Very rarely have we seen that India has shown divergence from the global trends. There should be some probably will stand out versus other emerging markets, given the fact that we are largely domestically driven. But that said, given the exposure that we have to the world as far as the external sector is concerned, I think some kind of pressure will probably spill over to domestic sector as well. And we should be seeing a slower second half of the year. Maybe the first quarter, second quarter could show some resilience.
Do you see it the same way? Mythili, do weigh in on this, because if there is trouble elsewhere in the world, why do you think India would be an outlier?
Might not be as badly affected as the rest of the world, simply because, as Madhavi said, we are largely domestically driven. But that doesn't help very much, given that we are an exceedingly poor country, we are a developing economy, and we need to grow much faster than what we are. Our current estimates, as per the RBI, says 7.2 for this fiscal, and that's just not good enough because we effectively lost 2 years because of COVID. Yes, the picture today is a very, very mixed picture. We have seen fairly encouraging data coming in from the PMI survey of services. So that seems to suggest that services are looking up. We've got fairly good numbers also as far as core sector growth is concerned. But that's mainly because last year was so bad. So overall, I would say that the Indian economy is certainly not out of the woods. The fact that the rupee is depreciating and the oil prices are not really coming down doesn't help. The current account deficit, we're likely to end this year at about 3%. So overall, the picture is far from, what should I say, bright. It may not be very gloomy, but that's not good enough for a country like us.
Not good enough. Mr. Joshi, what's your perspective? We've seen the rupee down nearly 6% since January this year. So how much further do you think it's going to fall, considering the underlying fundamentals at this stage? And how much damage do you think it's already inflicted on the Indian economy with the kind of decline we've seen?
Well, I don't think it has inflicted any damage so far. I think the weakness in the rupee has been fairly controlled and fairly gradual, I would say. I think if you compare it to the two previous episodes of global financial crisis, or for that matter, taper tantrum, the depreciation was much, much sharper. Now, I think having said that, I think the rupee fundamentally has to weaken because I think, one, the current account deficit is moving up. The exports are going to slow down because they depend heavily on global demand, and imports are very sticky. I think even if the economy is not moving that fast, I think the imports still continue to be robust. and they are a little inelastic to prices. So import demand will continue and export demand will slow down. And I think, as you know, in GDP demand side, I think exports minus imports enters as a component. So it's going to shave off some part of the GDP. So far, I think the decline has been orderly. The central bank has been intervening. It is trying to slow down the pace of depreciation. Now, I think my sense is it will weaken further. I can't predict where it will go, but I think definitely it is going to weaken further. I think the good news there is that what we have seen in the past is that rupee does weaken during periods of crisis. It does overshoot, and that whatever overshooting happens, it also gets corrected, and we do see the episode end with some appreciation as well. So clearly, I think it will revert back to its fundamental value. But given that the global environment is so complex right now, it's extremely hard for anyone to say how it's going to play out.
At this time, Madhavi, if you're going to try and control inflation, which of course the RBI is trying to do, it has of course been busy deploying its foreign exchange reserves war chest to arrest the fall of the rupee. How much room do you think it has to maneuver to keep the currency from falling further? And do you believe it has the requisite firepower? Even if it does, do you think it will be deployed?
See, RBI definitely has a much stronger war chest than what it had in the past episodes where rupee depreciated very strongly. But that said, I think they would probably start getting a little more, consider the fact that a very sharp, a very sharp intervention in the currency could actually lead to dislocation in the markets. We have seen that in the recent past when RBI was intervening strongly in the forward market, doing buy sell swaps, which essentially led to a sharp fall in forward premia to the extent that it was, I think, the lowest in the last 10 years or so. That
to have a bit of a connection issue with Madhmi over there, but taking it across to Mythili. Mythili, last week, the RBI Deputy Governor, Michael Patra, had said that the central bank will not allow jerky movements of the rupee. He even stressed that the Indian currency has seen the least depreciation in recent times. He said this, and I'm quoting him. He says, "We will stand for its stability, and we are doing it. We are there in the market, and we will not allow disorderly movement of the rupee. We have no level in mind," he said, "but we will not allow jerky movement, that is for certain." It's a very strong statement put out by the RBI, and I'm sure it does well to, help sentiment. But as far as the RBI's moves so far are concerned in trying to balance out growth against controlling inflation, how do you think it has done? And how much further do you think the RBI is going to work in tandem with the government to keep the growth agenda going?
Well, as far as RBI's policy on the rupee is concerned, the exchange rate is concerned, what Michael Patra said was a standard RBI policy. The RBI intervenes to reduce excessive volatility. It doesn't have a level in mind. That having been said, the fact is that when the rupee depreciates, it also means that it pushes up the price of all imported commodities, particularly oil. And that has grave implications for our inflation. At a time when inflation is already very high, and as per the RBI's own admission, we're going to see three consecutive quarters of this fiscal, the first 3 quarters, with inflation over the 6% band of the Reserve Bank of India. The fact is that when you have the rupee depreciating, it really doesn't help your case against inflation at all. And RBI has, at least officially, switched gears, and the focus is now to fighting inflation rather than promoting growth, because the RBI has realized that we've reached a stage where inflation has become an impediment to growth. So that is where their first focus lies. Unfortunately, the problem is that since Reserve Bank is a full-service central bank, any fight against inflation also means it pushes up the cost of government borrowing. And the Reserve Bank of India is also the government's merchant banker. It also has a role to ensure that government borrows cheap. So basically, the Reserve Bank has been caught between a rock and a hard place, partly because of its own doing, partly because of circumstances, external circumstances didn't help. But the fact is that we'll have to live with that pain of inflation, and growth is going to slow down. Any fight against inflation is going to impact growth. It's all very well to say that, had the Reserve Bank of India done this, but that's now history. What can we do now? Nothing very much, I'm afraid. The government has been trying through administrative measures, but whatever government does in terms of tax giveaways comes back to it in the form of a higher fiscal deficit. So I'm afraid there are not too many choices. We will perhaps have to live through the pain.
Mr. Joshi, I'm looking at, like you mentioned, that inflation at this point in time, it's looking rather sticky, and Brent right now, as far as inflation concerns go, its connection with our import bill when it comes to crude is probably the biggest pain point. But Brent, if you look at it, has fallen to $102. It's down about 10%. Is that good enough, or is it going to take much more? Because it does take some pressure off the Indian currency, doesn't it? And it does help really stabilize growth, if not take it ahead.
Well, I agree that crude is a very important component, I think, because 85% of it is imported. But I think we have seen a lot of volatility in crude. Whether it is going to stick at the current levels, it's very hard to say. I think there are too many moving parts. The Russia-Ukraine conflict is still on, and I think there are moves to further restrict Russian demand for demand for Russian oil. So all those things, I think, create a kind of uncertain environment. Our assessment, or I think we believe that the value at which the crude will float in the rest of the year is between 95 to 110. I think so that's the range in which it is going to move. So that's not too much of a comfort. I think the comfort will really come if oil falls below 80, I would say. I think that is what we can comfortably bear. But beyond that, I think it starts putting pressure on the fisc. It starts pushing pressure on the consumer, because it also slows down the demand, because people have to pay more for oil, the cooking gas, etc., etc. So I think the levels are uncomfortable, and I think they're going to remain like that for some time. The only, I think, what can bring it down to some extent is a recession in the advanced countries. But even then, I think the supply of oil is very constrained right now. So the pressure on oil might continue.
Do you see, Madhavi, the pressure from oil continuing? Because right now, if you look at, since Russia invaded Ukraine in February this year, the price of crude has consistently remained around $100 to the barrel, but it has come off those crazy highs too. Yes, volatility is something that we are looking at. The Indian government, of course, putting strictures on Indian exports of crude oil too. So how much do you think it's going to take? How much time do you think it's going to take for all of this to reflect on the Indian currency until we reach a point of stability? Because that's going to have a bearing going ahead as well, don't you think?
So
well, it will. I think so. A lot depends on.
Yes, I was just taking that across to Madhavi. Mr. Joshi, I'll come to you in a moment.
Sure.
Madhavi, yes, please go ahead.
Yes. So you've asked multiple questions on this front. So I agree with Joshi, sir, that the oil market is currently at this point in time very uncertain. And I also believe that the oil could range somewhere close to 95 to 100 and 115 in the rest of the year, which is quite a wide range, honestly, and may not be a very comfortable range for us to really, revise up the GDP growth. That said, as far as the rupee is concerned, see, rupee moves not only on account of current account, but also capital account. And at this point in time, we are seeing continuous outflows from the Indian economy. I think FIIs have already taken out close to around 40 billion worth of dollars in the last, around 7 or 8 months. That itself has put pressure on the rupee. And I think to some extent that might just continue, because my sense is that you would see further pain in the global equities going ahead in the next quarter or so. And then probably in early part of next year, we should see some stabilization in emerging market risk premia, and we could see some reversion in terms of flows. But at least in the near term, both current and capital account looks to be, in a difficult territory, which means that the first half of, the fiscal year could see current account actually being in a very sticky zone. For the year as a whole, we are looking at current account to cross 3%. We are looking at current account at 3.2% and balance of payment at around 60 billion plus. And more importantly, the core balance of payment, which is basically your current account and the funding of current account by stable flows, which is FDI, to be even worse than what you saw in 2013. So I think the pressure on currency is going to stay. RBI will probably be present in the market. As I was mentioning last time, which I couldn't complete, that RBI had been intervening both in the spot as well as forward and even futures market in the last leg of RBI rupee depreciation, which we saw in the month of May and June, to the extent that it led to huge dislocation in the forward premium market, and the premium had actually fallen substantially, which to some extent led to self-fulfilling behavior of the currency, and rupee actually fell further instead of getting stabilized in the spot market, and RBI had to sort of let itself off to find new level for the rupee. I think as Joshi sir also mentioning, I also believe the rupee probably has further legs to correct, and it should act actually as a natural stabilizer to the policy reaction function and the economic slowdown that we are seeing. But that's it. I think, as I said, probably in the first part of next calendar year, you should see some kind of flow reversion, which should stabilize the currency. But in the near term, I think we still have more pain to endure, followed by some stability and reversion.
Mr. Joshi, if the Fed goes ahead and aggressively hikes those rates, is that going to have a further bearing on how the Indian currency does? And if so, then do we need some kind of mechanism that will, despite those kind of moves, still keep the growth momentum going?
Well, I think the Fed is definitely going to raise rates. I think this is their communication as per the dot plot, and I think this is what our US economists also believe. So that seems to be a given at this juncture, unless I think the recession actually takes hold. I mean, then I think Fed need not hike so aggressively. But what is very clear is that the global demand is slowing, and I think this is going to create a pain point for at least the export sector. Definitely, it's already playing out actually. So I think in this case, I don't think we are decoupled, I think, from the global economy. What is going to support growth this year is the services sector, which you initially spoke about. I think services sector was the contact-based services were 11.3% below their pre-pandemic level. So it's showing a natural bounce back because the conditions are ripe for it to grow. So this year is going to be a year of service sector contact-based services growth. Manufacturing is somewhat weaker. The utilities are doing well. So it's a mixed picture that is emerging, and the monsoons are still playing out. So let's hope that the distribution over time and over geographies is balanced. And that, I think, if that happens, then we do believe that economy can grow at 7.3% in this fiscal year, which would be an extremely good rate of growth in the global context that we are in today.
Really the question, because which are the sectors that are likely to drive growth despite the pressure that we see on the Indian currency? Because if that stays, then of course input costs go up, and as far as manufacturing is concerned, that will suffer with crude raw material prices. If companies have to pay more for all of that, it is going to put pressures as far as the manufacturing sector is concerned. So Mythili, which are the sectors that you are banking on if growth is going to go up, at least in the second half of this calendar year?
Well, as we spoke about services earlier, services is one sector which should look up. And one sector, frankly, which has held throughout the pandemic, in fact, has done very well, and a very large section of our population depends on it, is agriculture. Agriculture has come to the rescue of the Indian economy again and again throughout the COVID years, when both manufacturing and services dipped. Whatever growth that we saw, or whatever decline that we saw, it was cushioned by the growth, positive performance of agriculture. If we get good monsoons this year, and at the moment monsoons are playing a little iffy, we've seen severe drought waves before the pre-monsoon showers hit India. So I think agriculture will come to the support of the economy, and services. Unfortunately, manufacturing, where we should be seeing good growth because that's where the jobs are, that is not really doing well. And I think that will continue to be the position until such time as government's capex, that investment in public sector investment and public investment, drives in private investment, and we see manufacturing also pick up. So as of now, agriculture and services, I think these are the two sectors. Exports, which held up so far, are unlikely to do so as global demand comes down. The depreciation of the rupee, which should normally help, will not be offset by the decline in demand. So overall, I would think services as well as agriculture are the two sectors.
Madhavi, employment has been a matter of concern as far as our economy is concerned, and that has been the case for a long time. If these are the sectors that Mythili is talking about, Mr. Joshi is talking about, services, if it's the agriculture sector, how much of a difference do you see coming in at our employment levels, which have been below par and continue to languish?
This is for me.
Madhavi.
Oh, yeah. I think employment situation has been a little tricky. Since COVID, we had reached the pre-COVID employment level across sectors, I believe. But I think if you look at the trend growth, had there been no pandemic, we probably would have been 7 to 8% higher than what we are at this point in time. Of course, if there is limited growth in the manufacturing sector, which is anyway a decent amount of labor employment that happens, which is non-agriculture, is essentially in manufacturing, probably should see a much slower growth, is what I understand. But nonetheless, I think labor market conditions continue to remain, a little uncertain, especially the participation rate continues to remain lower than the pre-pandemic level.
Mr. Joshi, I'll let you have the last word on this. If India is going to continue on its growth trajectory, as far as factors that will help it, that will aid its move upwards, which ones do you think are going to have the largest role to play?
Well, I think from a, you're talking of this year or from a medium-term perspective?
From a medium-term perspective, Mr.
Yeah,
Joshi,
sure.
because growth over the long term, because the
Yes,
pressures that are current are probably factored in. Those pressures aren't going away in a jiffy. But if you look at the near to medium term, perhaps
Sure.
there is going to be a shift. And like all of you have mentioned, India could possibly be an outlier because there is growth concerns elsewhere in the world. Right now, India seems to have enough domestic demand that could drive the momentum of growth ahead. But which will be the biggest contributing factors is what I want to know from you.
Sure. I think the first contributor has to be investment. I think if investments don't revive decisively, I think the growth is not going to lift on a sustainable basis. And I think on that front, I think government has taken a lead since the pandemic started on pushing the infrastructure investment up, particularly the national infrastructure pipeline, etc. And the budgets have been reasonably generous, I would say, towards capex. Although I think the currently the capex momentum is somewhat a little tepid, but over the medium run, I think what you will see is that the PLI scheme of the government, I think that is going to bear fruit, and we do expect it to contribute 13 to 15% to the manufacturing investments over the next 4 to 5 years. So that is one driver. Second driver is the large corporates in India who account for bulk of the investments. I think they are very favorably placed to invest. Their balance sheets are pretty healthy. They are deleveraged. They can easily finance the investments on their own, and also I think by taking help of the financial institution. It's only the uncertainty which is holding them back. In some of the segments like, let's say, infrastructure linked, which are linked to government investment like steel, cement, I think the investment cycle is already picked up.
Right.
What is being held back is the general industrials. I mean, even the auto sector, which has done well as per the FADA data today,
yes,
but it is yet to catch up with the pre-pandemic. So I think so government-led infrastructure investment, crowding in private investment as well, I think that's going to be the driver of growth over the medium run.
Well, we certainly hope that is the case. Thank you for joining us, Madhavi, Mythili, Mr. Joshi. It's a pleasure having you with us. Talk about the Indian economy as it stands and the pressure points. Indeed, what could be the factors that will help us beat what is afflicting the world right now, and how we could possibly be an outlier is something that we are watching very closely. For the moment, we'll take a small breather on this edition of India Development Debate. We'll be back with a lot more after this break. To stay with us.